Hey everyone, and welcome back to our channel. We truly appreciate the support you've shown with our previous video covering the question, what is economics? In today's video, we're going to build upon some of the terms we mentioned in the last one, namely the concept of scarcity. So if you clicked onto this video, chances are you want to know what economists are talking about when they say opportunity costs. Well, you're in luck, because by the end of this video, you'll not only know what opportunity cost is, but we will have gone over an applicable real-life example, and you will begin to see how you subconsciously evaluate decisions based on opportunity cost every single day. Every day we're faced with dozens, maybe hundreds of decisions, right? Wrong. According to researchers, the average adult makes upwards of 35,000 choices each day. Researchers at Cornell University estimate we make approximately 227 decisions each day based on food. Just food. Imagine all of the other decisions that you make. Each decision we make comes at a price. And what is this price, you might ask? It's the opportunity cost. Due to the concept of scarcity, which we mentioned in the last video, every time you make a decision, you're gaining something, but you're also giving something up in return. Here's a simple example using one of, if not the scarcest resource of all: time. Every hour you spend watching videos on YouTube is 1 hour that you can spend doing something else, such as studying for your final exam. So in this case, you would say that the opportunity cost of 1 hour of watching YouTube videos is 1 hour of studying. But wait a second. Sure, I could have been studying for that 1 hour, but I also could have been doing a number of alternative activities with that 1 hour I spent watching YouTube videos, such as walking the dog, playing a video game, cleaning my room, or reading a book, etc. So where do these alternatives come into the equation? Well, technically, I could have done any of these things instead of watching YouTube videos for 1 hour. In economics, we refer to opportunity cost as the cost of the best foregone alternative that you give up in order to get something else. So in our previous example, your opportunity cost would be referring to 1 hour spent doing the alternative which you preferred or you like to do best. That was a simple example. Let's now try a trickier one that you're more likely to see on an introductory economics test. So let's suppose that you go to a hockey game on a Friday night, and you spend $300 on a ticket to the game. Instead, you could have gone to a baseball game for $200, gone out with your friends for dinner for $40, or worked your shift as a bartender at a fancy hotel earning $400 in wages and tips. Which of the alternatives to the hockey game is the best foregone alternative? Well, in monetary terms, it would be the $400 that you would forfeit from not working that night. Therefore, your total opportunity cost for the hockey game is $300 for the ticket and $400 in lost potential earnings, coming to a total cost of $700. The money that you paid for the hockey ticket is called an explicit cost. You actually had to pay some amount of money out of pocket and could receive a receipt for the transaction. The lost wages from not working is called an implicit cost. You technically gave up some income, but it was only potential income, and you did not have to pay any money out of pocket. In almost all cases, opportunity cost includes both explicit and implicit costs. So to summarize everything we've covered today, opportunity cost is the cost of what you give up or your best foregone alternative to get something else in return. So once again, remember that our channel's just getting started and there's lots of content to come. If you liked this video and are excited to see more, let us know by liking the video, subscribing to the channel, and comment what sort of economic topics you'd like to see us cover in the future. We are planning to begin with weekly videos, and how cool would it be for your idea to be featured in the next one? Thanks for watching this video, and we'll catch you in the next.